Welcome to the Deep Dive. Today we've got a special TalkTickers Deep Dive for you.
That's right. We're jumping into Boston Scientific's recent earnings call, Q2 2025.
And this wasn't just another earnings call, was it? There's a really compelling story here.
Absolutely. In Medtech, which is always, shifting, they didn't just meet expectations, they really smashed them.
Yes, significantly surpassed them. And it kind of reshapes how we might think about growth in this sector.
Exactly. So our mission today, we're going to cut through, all the dense details from the call.
Get right to the core insights, the strategic takeaways.
So you can really grasp what's driving this performance and maybe more importantly, what it signals for the wider medtech world.
Okay, let's hit those headline numbers first because they paint a pretty clear picture right off the bat.
They really do.
Boston Scientific's Q2 results, they weren't just good, they flat out outperformed what analysts were expecting.
Big time. Total company operational sales up 22%. Impressive.
And the key one, organic sales, that's, growth without the acquisitions and currency noise, up a massive 17%.
Which you have to remember, their own guidance was 13% to 15%. So they didn't just beat it, they blew past it.
And it wasn't just on the top line, right?
No, definitely not. Adjusted EPS, earnings per share, came in at 75 cents. That's up 23% compared to last year.
And again, that beat their own guidance. The high end was 73 cents.
Exactly. So what this snapshot tells you straight away is Boston Scientific isn't just like chugging along. They're hitting the accelerator.
It feels like more than just a beat. It feels like a statement.
It is a statement. It says their strategy, their investments, their execution, it's all translating directly into grabbing significant market share.
That's a really powerful position, especially, in medtech where keeping up that kind of high growth is tough.
It really is.
So, okay, this fantastic quarter. What does it mean for the rest of 2025? Let's unpack their updated outlook.
Well, you can feel the confidence, right? Management has raised their guidance pretty significantly for the full year and for Q3.
Okay, give us the numbers.
For the full year 2025, they're now looking at organic growth between 14% and 15%.
Up from 12% to 14% before. That's a solid jump.
It is. And full year adjusted EPS, they bumped that up too, now expecting $2.95 to $2.99.
Which represents, 18-19% growth? That's strong.
Very strong. And it tells you this isn't just about riding a wave this quarter. They believe they have durable growth drivers in place. They've got conviction.
That revised outlook really does underline the momentum they've built. Okay, let's get into the operational nuts and bolts margins.
Yeah, good point. Their Q2 adjusted operating margin actually expanded, up 50 basis points year over year, landing at 27.6%.
Which is pretty good considering.
Exactly. It shows the strong top-line growth pulling through, plus what they call smart spend controls. So careful cost management, even while absorbing some hits.
And there was a hit on the gross margin, right?
There was, yeah. Adjusted gross margin dipped about 100 basis points compared to last year, came in at 69.4%.
And that was the accurate valve thing.
That's exactly it. About a $100 million inventory charge from discontinuing the accurate valve. But here's the key thing.
Go on.
Management expects the full year adjusted gross margin to be roughly in line with 2024.
How are they managing that?
It's mainly down to favorable product mix. Think higher margin stuff like Watchman and FARAPULSE really kicking in.
So those are offsetting the accurate charges.
Offsetting accurate and also getting a bit of help from lower tariff impacts than they initially expected. Shows real agility, managing the portfolio and those external pressures.
That's crucial, that ability to mitigate. Shows they're actively optimizing things. What about other financial points? Cash flow, debt.
Yeah, they touched on those. Full year free cash flow now expected around $3.5 billion. Pretty robust.
Solid.
They also got a credit rating upgrade from Moody's up to A3. That's a nice vote of confidence from the market.
And their debt levels.
Gross debt leverage ratio is looking healthy at 2.1 times. And their capital allocation priorities. Still the same playbook.
Which is?
Strategic. Tuck in M&A first, like Sonov and Oncology, which both closed in Q2. Then, share repurchases after that.
Okay, let's switch gears to the regions. How do things look geographically?
Well, the U.S. was the standout. Phenomenal 31% operational growth there.
Wow. Mostly cardiovascular driving that.
Yeah, largely the cardio portfolio powering that growth.
Right.
Now, EMEA, Europe, Middle East, Africa showed 2% operational growth.
Seems a bit lower.
It does, but that number includes the accurate valve discontinuation impact. Remember, that valve did about $200 million in EME.
Right. So if you strip that out.
If you exclude accurate, EMEA growth jumps to 7%. And within that, they're seeing really strong double-digit growth for Farapulse, Watchman, and their complex PCI stuff.
Gotcha. And Asia Pacific.
Also strong. 15% operational growth overall, led by double-digit growth in the big markets, Japan, China, Australia.
Japan sounded particularly good.
Yeah, Japan was the highlight. High teens growth. And FARAPULSE, their PFA device, it's actually become a leader there.
Even though they weren't first to market.
Exactly. Treated over 15,000 patients, getting new accounts, launching FARAWAVE Nav, really gaining traction.
And China. I know that's been watched closely.
China bounced back nicely in Q2, returned to mid-teens growth. Pretty diversified, but again, FARAPULSE and their IVUS imaging were key drivers there.
Okay, let's dive into the specific business units. Where should we start? MedSurg.
Yeah, let's look at MedSurg. Showed, consistent underlying strength. Urology had solid organic growth.
What was driving that?
Mostly their stone management and prosthetic urology lines. Plus, they got that expanded indication for RESUM for larger glands in the U.S., which helps.
What about the Daxonics integration? Any disruption there?
Yeah, they acknowledged some short-term commercial disruption, some destocking in the first half, but they sound confident about improvement in the second half and a strong 2026 for that.
Okay. And endoscopy?
Endo had a strong quarter too. 8% global growth, actually double digits in the U.S.
The
usual anchors, really. Exalt single-use scopes, Mantis, Axios, Overstitch. Overstitch saw really notable growth from things like ESG weight loss procedures and closures. Expecting continued high single digits in H2.
Neuromodulation.
Grew 7%. The brain franchise did really well, mid-teens growth, thanks to Cartesia, XHX leads, and Illumina 3D.
And the pain side.
Pain was mid-single digits. Intercept continues to gain traction, past 50,000 patients treated now.
Okay, now, cardiology, that was the real powerhouse number, right? 28% growth overall.
Absolutely, just stellar. Let's break it down. Interventional Cardiology, ICTX, grew 9%.
Which sounds good, but...
But if you exclude the accurate impact, it was very strong double-digit growth.
Right. What specifically within ICTX?
Coronary therapies grew high teens. Agent DCB, their drug-coated balloon, really accelerated with new accounts opening up.
And the reimbursement picture looks better there, too.
Yeah, they sound confident with permanent CPT codes coming in 2027. Their imaging portfolio also got a boost from a Class 1A recommendation for complex lesions.
What about new stuff? Bolt IVL. Sonov.
Bolt IVL trial enrollment is on track. Should finish by H1 2026. And Sonov, the hypertension acquisition, closed, and the Thrive trial is enrolling. That's their re-entry into RDN.
Okay, CRM, cardiac rhythm management, saw 1% growth.
Yeah, bit mixed there. Diagnostics did well, low double digits, thanks to LuxDX ICM and the new LuxDX2 launch in Europe.
But the core pacemaker defibrillator market?
Low voltage declined slightly, high voltage was roughly flat. But the big catalyst they're looking for is the Empower leadless pacemaker, expecting FDA approval by year-end.
That could be significant. Now, Watchman, still a star.
Absolutely. 28% growth just keeps performing. A big driver is that concomitant uptake in the U.S.
Explain that again.
Doctors implanting the Watchman device during another procedure, like an ablation. Streamlines things for the patient, boosts volume.
And that's catching on?
Hugely. Over 60% of implanters are doing it now. Plus, the Watchman Flex Pro got its CE mark, showing a strong safety profile. They're studying concomitant use with FARAPULSE in Asia too, and get expanded labeling as first-line therapy post-ablation.
Okay, finally, the really explosive growth. Electrophysiology, EP, 94%.
Phenomenal, right? Now, a lot of that is lapping the initial FARAPULSE launch from last year.
But not all of it.
No, definitely not. They also saw mid-teens sequential growth from Q1 to Q2. That shows real, sustained momentum.
Driven by FARAPULSE.
Primarily, yes. Doctors seem to really like its safety, its predictability, its versatility. Plus, they're placing more Opal mapping systems, and again, those concomitant procedures are helping.
Any label expansions?
Big one in the U.S. Expanded label for de novo AFib ablations, covering both paroxysmal and persistent AF. They expect similar approvals in Europe, Japan, and China soon.
Lots of pipeline activity, too.
Tons. Rematch AF trial for redo cases. Positive data from Advantage AF supporting the FARAPOINT PFA catheter approval next year. It's a busy space.
Okay, one more segment, peripheral intervention.
PI grew 17% operationally, 7% organically. Interventional oncology and embolization were strong double digits. They closed the Intrema Medical deal too, strengthening that IO portfolio.
Okay, wow. That's a lot of detail. Let's try to connect the dots. What's the bigger picture here?
Well, what's fascinating is the strategic depth. Take Watchman. Its growth seems really durable, right? That option data, the 60% concomitant uptake.
Yeah, management seems bullish, suggesting 20% plus growth could continue.
Exactly. And look at EP. They laid out clear growth vectors. It's not just one thing.
Right. It's market expansion, it's PFA adoption, where FARAPULSE is killing it, even in Japan.
It's new geographies like China. It's a constant stream of new products. FARAVIEW, FARAPOINT, FARALEX, even an ICE catheter coming. Their ambition is clear. Overall leader in EP.
And they seem to be executing towards that.
Definitely. Another interesting angle was the ASC discussion, ambulatory surgical centers.
Right. CMS proposing to allow ablations there. How does Boston Sci view that?
As a net positive, actually. Expands the market. Even if concomitant procedures are maybe less common initially in ASCs, it brings more patients into the system.
So they see it as gradual adoption, simpler cases first.
Pretty much. Not cannibalizing their hospital business, but growing the overall pie.
Makes sense. What else stood out from an investor perspective?
Well, the solid performance in MedSurg shouldn't be overlooked. Endo, neuro, urology, they're providing a really strong diversified foundation, even navigating things like scope competition or that Daxonics integration.
And their spending approach, balancing margins and R&D.
Yeah, they seem very focused on that balance. Expanding margins, yes, but also reinvesting heavily in R&D to drive what they call durable, differentiated revenue growth. It's that long-term view.
The tax rate news was positive too, wasn't it?
Huge. That OBBB legislation clarification basically eliminated a big potential tax headwind they were facing for 2026. That's a significant positive for future earnings.
Did they address any potential challenges like reimbursement cuts?
They did touch on the proposed cut to physician fees for LAR procedures, the Watchman ones. About 16%, yeah. Management is obviously against it, but they made the point that they don't think it will stop patients getting treatment, given how clinically important it is. We'll see how that plays out.
And capacity. Any concerns about keeping up with Watchman and FARAPULSE demand?
They address that. So they don't see major constraints right now. The ASC rule could help, plus ongoing hospital investments in tech solutions. Seems manageable for now.
So the overall strategy is clear. Keep outgrowing their markets through smart internal choices, venture deals, and M&A.
Precisely. And they flag their investor day on September 30th for more details on that long-term vision.
Okay, time for our favorite segment. But first, the essential disclaimer. This is not financial advice. We are absolutely not telling you what to do with your money.
Got it. Clear as day. But if I were pitching an idea, maybe an outrageous but plausible one based on this call,
Go on.
I'd lean towards a long position in Boston Scientific, specifically targeting that EP and structural heart exposure. So
Yeah.
FARAPULSE and Watchman.
Okay, the rationale.
Look, they're showing clear category leadership in PFA with FARAPULSE, dominating even tough markets like Japan as a later entrant. That says something.
And Watchman just keeps delivering.
Exactly. Robust growth, expanded indications, the concomitant trend. It's powerful. Then you layer on the pipeline new EP catheters, Empower leadless pacemaker coming, Sonov re-entering the RDN market.
So you think the market might still be underestimating this?
I think it's plausible. The market sometimes underweights these steady, high-impact innovators who execute relentlessly in big markets compared to pure disruptors. Boston Sci is showing incredible execution.
And the outrageous part of the trade.
Maybe pairing that long Boston Sci position with a short on a broad, generalist medtech ETF, essentially betting that Boston Scientific's specialized growth engine will significantly outperform the wider, more diversified sector average.
Interesting angle. Okay, let's wrap this up.
Yeah, the core message is pretty clear.
Boston Scientific delivered a really strong Q2. Guidance is up significantly, and they have multiple powerful growth drivers firing, especially in cardio and EP.
Absolutely. The key takeaways are about strategic focus, that relentless innovation pipeline, disciplined execution, and really aiming for market leadership in these key high-growth areas. They're turning challenges into fuel.
And one last time, just to be perfectly clear, this is not financial advice.
Not a bit.
But here's a final thought for you to chew on. We see Boston Scientific accelerating growth in areas like coronary therapies, which some might see as mature, while also carving out leadership in brand new spaces like PFA.
Right.
So the question is, how might their specific strategic approach, that blend of execution, innovation, and smart M&A, actually redefine what's possible across the entire medtech landscape over the next few years?
Yes.
Something to think about.
Definitely something to watch.
Thanks for joining us for this TalkTickers Deep Dive. We hope you'll continue exploring these complex topics with us.